Lucid Motors was once one of the most promising electric vehicle startups in the world. The company had the backing of Saudi Arabia's sovereign wealth fund and a team of experienced engineers led by former Tesla CEO Peter Rawlinson. However, Lucid's fortunes have turned sour in recent months. The company has missed production targets, its stock price has plummeted, and it is now facing a class action lawsuit from shareholders. So, what went wrong at Lucid Motors? Why is the company on the brink of failure? Lucid Motors was founded in 2007 with the goal of developing and manufacturing luxury electric vehicles. The company's first production car, the Lucid Air, was unveiled in 2020 and promised to be a game-changer in the EV market. The Air had a range of over 500 miles, a top speed of over 200 miles per hour, and a luxurious interior. However, Lucid's ambitious goals came at a price. The company needed to raise billions of dollars to develop and produce the Air. Lucid initially planned to go public through a traditional IPO, but this plan was scrapped in 2020 due to the COVID-19 pandemic. Instead, Lucid merged with Churchill Capital Corp. IV, a special-purpose acquisition company, SPAC. The SPAC merger gave Lucid a much-needed cash infusion, but it also came with a lot of scrutiny. Investors were concerned about Lucid's lack of production experience and its high valuation. Lucid began production of the Air in September 2021. However, the company quickly fell behind on its production targets. In December 2021, Lucid announced that it would be producing just 300 Air sedans in 2021, instead of the 1,200 it had originally planned. Lucid also faced a number of production challenges. The company had to delay the launch of its Air Grand Touring model due to a shortage of batteries. Lucid was also forced to recall some of its Air sedans due to a software issue that could cause the cars to lose power. Lucid's production delays and missed targets have had a significant impact on its finances. The company has been losing money heavily, and its cash reserves are dwindling. In February 2023, Lucid announced that it was raising $1.5 billion in new funding. However, this funding round was met with skepticism from investors who were concerned about Lucid's long-term viability. Shareholder lawsuit. In March 2023, Lucid shareholders filed a class action lawsuit against the company. The lawsuit alleges that Lucid misled investors about its production capabilities and its financial condition. The lawsuit is still ongoing, but it could have serious consequences for Lucid if it is successful. Is Peter Rawlinson to blame? Lucid CEO, Peter Rawlinson, has been criticized for his role in the company's failure. Some analysts have accused Rawlinson of being too ambitious and of setting unrealistic goals for the company. Others have said that Rawlinson is a poor manager and that he has made a number of strategic mistakes. Rawlinson has defended his record at Lucid, saying that the company is still in its early stages of growth and that it is facing the same challenges that all startups face. However, it is clear that Rawlinson is under a lot of pressure to turn things around at Lucid. In addition to the factors discussed above, there are a number of other factors that may have contributed to Lucid Motors' failure. Poor planning. Lucid Motors may have underestimated the challenges of producing a luxury electric vehicle at scale. The company may have also made poor decisions about its supply chain and production process. Lack of experience. Lucid Motors is a relatively young company, and its management team lacks experience in mass production. This may have led to problems with quality control and production efficiency. Competition. The electric vehicle market is becoming increasingly competitive, with Tesla leading the way. Lucid Motors may have struggled to compete with Tesla's superior brand recognition and market share. Some analysts have argued that Peter Rawlinson's management style has also contributed to Lucid Motors' problems. Rawlinson is known for being demanding and perfectionistic. He has also been accused of being difficult to work with and of micromanaging his team. This management style may have created a toxic work environment at Lucid Motors. It may also have discouraged employees from speaking up and sharing ideas. If Lucid Motors is to have any chance of turning things around, it will need to make some significant changes. The company needs to address its production problems, improve its quality control, and streamline its operations. Lucid Motors also needs to develop a more realistic business plan. The company needs to focus on its core strengths and avoid trying to compete with Tesla on every front. Lucid Motors also needs to improve its management culture. The company needs to create a more positive and supportive work environment. Rawlinson needs to be willing to delegate more responsibility and to listen to the feedback of his team. Peter Rawlinson's role in the turnaround. Peter Rawlinson will play a key role in any turnaround effort at Lucid Motors. Rawlinson needs to be willing to admit his mistakes and to make changes to his management style. He also needs to be willing to listen to the feedback of his team and to delegate more responsibility. If Rawlinson can make these changes, then Lucid Motors may still have a chance of success. However, if Rawlinson is unable or unwilling to make the necessary changes, then Lucid Motors is likely to fail. In conclusion, it is too early to say whether Lucid Motors will be able to turn things around. However, the company faces a number of serious challenges. If Lucid Motors is to succeed, it will need to make some significant changes, including addressing its production problems, improving its quality control, streamlining its operations, developing a more realistic business plan, and improving its management culture.